welcome back. Well, you're still tuned in to Chartbusters on CNBC-TV18. Let's talk to one company then. We have Forgings, which is on our radar this morning. It reported what was a lackluster set of Q1 numbers. The margins were down 60 basis points on a year-on-year basis. The top-line growth was also in single digits. We have with us Mr. Krishnan, who is the Vice Chair and the Managing Director of Forgings, joining in, and Mr. BVN Madhu, who is the co-founder and Director of the EV division of the company, who's with us to discuss the quarter gone by and the plans in the EV segment going forward. Gentlemen, thank you very much for taking the time out. Mr. Krishnan, let's start with you because it was a quarter where we saw the revenue growth in single digits of around 8%. But you're still targeting 1,800 crores in terms of revenues for FY24, which would imply an over 20% growth on a year-on-year basis. How do you expect to achieve that?
Morning. Very happy to be here. We did about just under 20,000 tons in the first quarter, and we expect this year to end very close to 85,000 tons or slightly above that as well. So between 85 and 90,000 tons is where we expect to end the year at. We may be a little bit off the 1,800 number, more in the region of around 1,700 crores. And if things go well with a little bit of tailwinds, we could see us crossing or touching the 1,800 mark itself. We're quite bullish about the next 3 quarters.
Is there a further downside risk, sir, to the 1,700 crore number? Or 1,700 crore you'll definitely do?
We would expect to achieve the 1,700.
Okay, all right. But you're not ruling out the possibility of going back to around that 1,800 crores odd. You know, if I just look at a couple of stocks, the Forgings plays, RK Forgings, that stock has been going northward. While Forgings has valuation comfort, but delivery, I think, is something that the street has been waiting for. And if I look at the last 1 year chart. So what you say is going to be quite important from here on. Could you tell us about the margin trajectory? You know, margins in the first quarter itself were a little bit lower than what you've been talking about, around 19% odd margins. Could you tell us whether you stick to that? And also in the last few years, Mr. Krishnan, we have seen the revenues go from 1,100 crores to 1,400 crores, 1,400 crores, now you're talking about 1,700 crores. But that operating leverage is not playing out. Why is that?
I think a little bit of increase in raw material costs last fiscal has taken away the operating leverage across the board in which we have seen in the other operating expenses. So we have to work a little bit on raw material and see to it that we cut down our consumption over there. So that is some scope for improvement. We would expect margins to stay wherever, what we have been doing over the last few years, 18 plus, close to 19% by our calculation. So we would expect our margins to stay in that level over the next few months with a positive bias for cost reduction and revenue growth initiatives.
Okay. Mr. Madhu, I wanted to just get you into this conversation with regards to the EV piece. We understand that you're not really going to be looking at EVs until the first or the second half of FY25?
Yeah. Good morning. Thanks for having me. So as of now, we're on a very rapid customer acquisition path, and we are getting some really strong customer response at the moment. But we are quite confident that from the early half of the financial year, we'll be making a good amount of revenues. And we are already engaged with multiple customers on multiple fronts across the two-wheeler space, three-wheeler space, even the passenger car space and off-highway space. We have multiple projects happening at the moment. And we'll be starting production, the early part of the next financial year.
Can you quantify that for us when you talk about customer acquisitions? How many have you got on board? What is the envisaged order book that you're probably working with once you do start executing in maybe FY25 first or second half? And what is the percentage of sales and the targeted revenues?
So as of now, we have a multi-fold strategy. We are focusing on multiple segments, especially the passenger car and off-highway space. But we have made some really good growth, and we have acquired some really interesting customers in the two-wheeler space and three-wheeler space and the other industry segments as well. And we have multiple projects at testing phase at the moment, and we are setting up our facilities also to be ready, as early as possible definitely within the early half of the next financial year. And we are initially expecting the revenues to be quite tilted towards the two-wheeler space and the three-wheeler space. And definitely, some of the projects we have on the four-wheeler and off-highway space will pick up speed in no time.
All right. Madhu, you have your work cut out because, when Mr. Krishnan joined us the last time, he's expecting the EV space to be as big as the current business by 2030. So he's talking about 2,000 crores of revenues by 2030. That's a tall ask, but let's see whether you'll achieve that. Coming back to you, Mr. Krishnan, you have laid out a capex of close to around 500 crores for this year and next. What is your peak debt level that you're looking at? Point number one. And last year, your interest cost was close to 30 crores. Now, given this sort of capex with your current debt as well, what will the interest outgo for this year look like?
We expect our debt to go up by about 50 to 75 crores over the next each year over the next 2 years. So from around 430 crores of gross debt, we would expect to hit around 630 crores of 430 crores of gross term debt. We would expect to reach around 630 crores of 650 crores of term debt over the next 2 years, and thereafter debt level should come down. So interest cost wise, interest cost would be in the region of around 40-45 crores.
Okay. Mr. Krishnan, just leave us with your thoughts on the export business, because you've guided for the fact that it's expected to be static this year. Are you expecting a decline or absolute flat performance this time? And why is that?
We are expecting a flat performance this year because economies in the West are largely moribund. And there's nothing happening on the M and HCV side, particularly Class 8 trucks, significantly to cause an increase in the months to come. However, we see a lot of potential in exports because of customers moving away from China. That is a definite move, and over the next 24 months, we would expect exports to also play a significant part in our growth plan.
Okay, all right. Mr. Krishnan, final question before we let you go. 500 crores is the capex that you have lined up. Does it increase your forgings capacity?
Marginally by about 10,000 tons, but largely most of this will come on the machining space and on the EV and electrical spaces.
Got it.
Okay, all right, Mr. Krishnan as well as Mr. Madhu, thank you very much for joining in and speaking with us. So that is Forgings. They are saying that they might fall short of that 1,800 crore guidance in terms of revenues for FY24. They're aiming for around 1,700 odd crores. And let's see, they will make a dash to achieve that 1,800 odd crores. We'll take a short break. But on the other side, more on the markets, lot of stocks lined up. Stay tuned.